All right. I'm going to assume everything is ready. So, hello, welcome everyone to our April jobs, industry, and economics webinar. Joining today with me is Albert Chen, founder of Albert's List, who is only going to be here for a few minutes, while Dr. White, who is associate dean and professor at University of New Mexico, is going to offer his expert advice and professional opinion on the state of the job market as well as the economy. We hope this information will help you prepare for your job search or your financial planning, but to understand none of this is financial advice. And then without further ado, I'm going to pass that on to Dr. White.
Thank you, Colin. Welcome, welcome, welcome. Happy Tuesday evening for everybody here. Thank you for spending your evening, whether you're out in traffic, whether you're in traffic, whether you're rolling under traffic, whether you're, to Melanie's point, whittling dolls for yourself out of various elements of pencils and other things. Welcome back, and thank you for taking time out of your day to talk a little bit of economics with us. As you know, it's an honor to come here and speak to you all. It is a pleasure every month to do this. I've got, I want you to know you can always ask questions about anything that crosses your mind in the presentation, during the presentation, within the presentation. Never hesitate to reach out and interrupt. Once the hands start going, I can't stop them. And so we're going to talk about a lot of different things today and make that happen. So we are, and I reiterate, there's no such thing as a dumb question. So wherever you're coming from, it's perfectly fine to discuss, talk, engage, and really all your comments and suggestions, all your ideas, all help us create a better version of this presentation. So incredibly grateful here. Here, obviously not an AI generated photo. We commissioned a portraitist to paint Nietzsche 3 times and make one of the cats Nietzsche, which is the best part of any possible AI generated nonsense. So this is what we're about. So open your copy of Wealth of Nations, as Albert says in the comments. Let's see what we can rock and roll. Let's see what we can do. So here's what we got, everybody. Here's the summary. Waiting for the shoe to drop again. Beyond good and evil. That's so good. The guy in front, you're right, Jochen. That's absolutely right. Let me go back here and address this. I asked for Nietzsche. There's 3 Nietzsches here, if you notice, as well as a mustache Nietzsche, and it gave me 2 Hemingways. I didn't ask for multiples. I didn't ask for this. I did ask for the 1985 Chicago Bears there in the background, just as a slight, just to spice it up a bit. Just another day on the Golden Gate Bridge. So, cheers from Madison, Dane County, Wisconsin, Scott. I love it. I'll be going to Wisconsin later this summer, actually, late July. So I'm very excited to hear them. Hey, Michael, make it happen. Welcome aboard. Oh, my goodness, we got this. We got Jochen hallucinating multiple Nietzsches. I'm telling you, that's more than one Nietzsche. That's max to Nietzsche. So we've got, waiting for the shoe to drop, 177 jobs added in April of 2025. This is a number that would normally be a very average number as our economies go for a growing economy. There's some questions as to what a fair number should be. If the number is higher than this, if we're talking about 200, 250, 300. That makes a lot more sense, particularly in high immigration economies. We're transitioning out of a higher immigration rate to a less high immigration rate for a number of political reasons. And as a consequence, it's undetermined whether or not this level represents exactly a replacement level for the job market, but unemployment remains steady at 4.2%. All that said, there isn't anything, we're going to go under the hood today a little bit. So I'm going to go first with this kind of overarching thing. Also, likewise, please put your LinkedIn in the chat window. Please connect with everybody. We love to see it. Please, if you're not already my LinkedIn friend or LinkedIn enemy, feel free to reach out to me on LinkedIn as well. You can find me through any of these things. Very happy to engage and very happy when you make these things. I don't update enough nearly on LinkedIn. I'm trying to do more. We've got a little consulting company out there called Erebor doing municipal finance and consulting. So I've got I got some subcontractors help me out, and so I should be doing some more stuff later this year with this. So it's still in the job market all about healthcare again, 51,000. But as we found out, not all those healthcare jobs are created equal. And we'll explain a little bit more. We have a special deep dive on healthcare based on a question I received before today. Transportation, we're up about 29,000. That's an interesting dynamic. Transportation and warehousing. We're seeing complexities in trade policy where we had a lot of layoffs in transportation and warehousing post-COVID. We first came on in COVID with a lot of as the economy came roaring back, a lot of transportation hires. The hires were released. This is going to be interesting if this is maintained, particularly given that tariffs usually result in lower amounts of trade activity, making stuff like transportation and warehousing lower. But it's going to be, well, it is too early to tell if this is a 1 month off or whether this is a big deal. State and local government picked up 19K hires. Notice that on the bottom end of these shenanigans, we've got the federal government. They lost a couple thousand last month, and then we're down 9,000 now. Oh, you mean, oh, this is good. What do we got here? We got a comment from Michael. You mean executive has a murder-suicide pact with the GOP Congress? Ooh, that's an exciting development. Look at these shenanigans. Also, tariffs cause an instant increase in domestic prices. They do not cause an increase in domestic prices. And as we explained earlier, Michael, I don't know if this is the first time you've had a chance to visit us. We usually do a deep dive into tariffs as well. But one of the aspects that is challenging as well, we'll go into tariffs. Tariffs, of course, reduce the amount of trade that happens because they make stuff more expensive and make people less keen on buying those actual things. And one way to increase trade policy and increase the amount of trade that happens is to lower trade barriers. When we increase trade barriers, what that does is cause a lot fewer people to engage in trade. And then as a consequence, that give or take is how we sort of run this market. So it's a fascinating little issue too. Oh, good. We got Eileen, 5FYA. Why what color workers and hiring managers are both frozen in place? Ooh, a very interesting link. Thank you, Eileen, for dropping that in as well. I challenge you, reduce the competition and not see higher prices. Yes, when you reduce the competition, you get higher prices. Absolutely. That's what I'm saying. That's exactly right, Michael. Are you arguing with me or are you agreeing with me? I'm just trying to, I can't tell. So what we got is March revised down 43,000. February was down 15K. So even the job gains that we got the previous month and the last month with the recent data that came out, those actually dropped as well. Labor force participation rose slightly to 62.5%. So what we have here as well, we've got a question on the board. One of the questions we received beforehand, question 5, why do the employment statistics keep showing job increases every month, but everyone keeps saying the job market is so poor? Because for some people, it is poor. And even having a really high or really low historical unemployment rate, if we go back 60 years, having an unemployment rate at 4.2%, while higher than the 3.5% and low 3% unemployment we saw in the previous year, this is still something that renders itself fairly low. Like this is something that is a value that is historically low by long-term averages. And so when we look at tech-related job postings in particular, and those of you in technology feel this, if we're looking at technology as the only source of the economy and where people are actually especially in this group, much more focused on than other regional areas because the Bay Area is itself a powerhouse in this area. So tech-related postings below the pre-pandemic baseline in 2024. So the seasonal adjusted index to 2020 index of 100. We saw immediately at the beginning of COVID, we saw this drop-off in tech jobs, followed by this massive runoff in tech jobs as people hired. The market came back online, $5 trillion in stimulus spending, which led to 2021, 2022, which led to these massive hirings that happened. But then as a consequence, what happened? We had double the amount of hires. Tech overhired, the market changed. The canary in the coal mine is always tech. And then you saw beginning in 2022 a massive drop-off in the amount of tech-related jobs. And so you saw, as you can see, follow this volcano, so to speak. And look how far down we are. We are now almost at the nadir where we are in 2024, 2025. And Albert points out, well, meanwhile, the Wall Street Journal is declaring that Austin is no longer the tech hub that it once was. It certainly is. It's affecting all these markets. And when you make a bet on an industry like that, and Austin feels it, and as the Bay Area feels it as well, you're going to see that these drop-offs have really, really widespread economic effects. And they do ripple through the system. I've got people in Austin that I know, our graduate students, who have been looking for jobs for months and months and months and months. And so the follow-up question into this is that, yes, the job market itself is still quote unquote okay, but in particular sectors like the tech sector, which often is very responsive to swings in the perception of capital, interest rate increases, all this other stuff, in addition to this whole post-COVID pandemic rapid hiring followed by rapid non-hiring or layoffs that occurred. We're in a situation now where it is by nature a more volatile index, but there is not going to be likely a quick turnaround on this until such time as those rates start coming down and still we see some of those actions and improvements that we expect the economy to do when we're actually gearing up towards another growth period again. Melanie says, as a developer in 2025, I'm basically a Detroit auto worker in 1979. Ha! So, Melanie, if you're not already a chain smoker, please do so. Take it up, have a 40 pack, and just let the day go by. I know another rough day at Pontiac with Melanie, but you're not wrong because this isn't. I want to validate your feelings about this because it is not to this point merely just vibes or merely just a question. It is a real feeling and a real observation that we're making. It is hard on tech. But that says there are other sectors as well, other places, other elements that you can get into. But also, I would also say, keep trying, keep upskilling, get your LinkedIn resumes out. There are people out there hiring, and I know it's tough. And you've seen some markets just fall out altogether. Project management, of course. You've got companies making choices at the margins. Let's hire somebody in who's new, who knows a little bit about it, for a quarter of the pay as an experienced professional who knows what they're doing. So especially if you've been out there for a few years, some of the old math doesn't work particularly well, especially on the words on the street. And this is interesting. So Mark, good question. Any comparison on big tech startups are the same across the board? This is variable. I don't have that breakdown today, but I've read a few things on this as well. So it depends. So you've got startup capital. So the startup space is an interesting space. And so right now you've gotten at the same time, in the last 3 years, we've seen a simultaneous push by a lot of money that's flowing around in places like private equity, other places, although some of that's decreased a little bit, into startups to fund startup capitals, VCs, all that kind of stuff. And so when you take on these positions and take on these roles and invest in these companies, you're looking to hire, build. But the question of what they spend money on is important. And you've seen even the companies with the money to hire are choosing not to. They might be building out infrastructure like Microsoft, buying your standard 3 Mile Island and then making it into a data center. They're building capacity, building resources, but they're not necessarily putting the labor where it is. And people are being very careful about that perspective across the board. But it does vary whether you're a big tech or whether you're a startup. And I say if you are a startup, the market, your mileage is also going to vary depending on what sector you're in, the nature of funding. There's still a lot of funding flowing around in these areas. I was just chatting with a VC person last week, and I'm like, "Yo, what's the word on the street?" And they're like, "Well, the good news is I've had no failures this week." And I'm like, "Oh, that's exciting." But basically, it is a tougher market right now. They're expecting some things to wind down, and there are some issues, especially ones that are exposed to some of the areas involving trade. And so let's talk about this. So I had another question in the pre-Albert's List seminar that said, what if any jobs are stable in this current administration and economy? So we all stare off at the distance and look to ourselves and ask, where is that peaceful meadow where we can frolic without worry and abandon? Where is the Elysium of the job market where when there's a recession, people are worried about it? So here's the good news and the bad. So if you're working in tech right now, tech is already experiencing a tech session. And likely it's not going to get, even if it fell out, I mean, the economy could very well fall off the face of the planet, which would make it harder for everybody. But right now, I still think that probability is relatively low. And then as a consequence, you're enduring it right now. I don't see a massive churn downward. And actually, I think that in some respects, getting us further along in the economic cycle is going to position tech better in the future. But if you're sitting in a job right now, you're worried about this. How recession-proof is your job? And I will say a couple of things first. I can use all the past data I want. It's not going to adequately reflect necessarily what the boots on the ground are going to be today. So even if I said that historically, and indeed historically, these are the greatest industries that offer recession resistance, from education and health services, to utilities, to government, to financial activities, to transportation and warehousing, mining and logging, information, retail trade, all the way down, and perhaps not particularly recession-proof is construction, which are prone to up and down in the industry. Now, if I say that you're in utilities, you say, oh, well, my job is pretty safe. It doesn't always end up being that way. Statistically, you're safer, but your individual experience is going to be based on a lot of those independent variables. And I would further add, in the addition of AI, and we know in this particular audience, you have a great amount of expertise in this area, as well as I've spoken to a number of people with greater expertise than I about this. And it depends. And you've got like the Malthusians on one side that are basically like, hey, AI is going to kill jobs and everyone's job is going to be destroyed. It's coming for everybody's job and that sort of thing. And you've got like the optimists who are mainly like, well, AI is going to improve productivity overall. It'll aggregate the increase and improve the workforce and create a bunch of advantages that help the economy grow down the line. It's never going to be any one of those things, and it will be highly variable on those aspects. And because of that, that complicates some of this matter. So the question of a recession-proof job as it existed before AI is different than one that exists after, is the big picture. And so on the right-hand side, I will say, though, and this is also speaking to that question of talking about looking at hiring rates depending on the strictness of education, right? So hiring rates and firing rates are correlated in the sense that areas with a lot of turnover, industries with a lot of turnover, jobs with a lot of turnover, jobs that don't require a lot of education, they typically see a lot of month on month hiring and turnover. And so, yes, it's true that hiring is really high for people with a high school or GED because those jobs have a high turnover rate. When you have extensive preparation, multiple degrees, other things that you're dealing with, other things that you can maintain, it's actually the hiring rate is much lower because your specific skill set and the job that you're in itself has a much lower turnover, has a much lower churn. And so between these two things, although I can say, yes, if you're a highly educated person in utilities, government, or education and health services, you'll experience less turnover than somebody who isn't. It doesn't mean that you'll be safe ipso facto just because of that thing. And that's a really big deal. And so Scott says, CBS News, good question. Wisconsin students shot blue collar. Very interesting point as well. And one aspect is, and especially in this question, oh, Jochen, good question. In the left-hand chart, how is the information category defined? IT or author editor? It seems odd that that would be in the middle of that chart. Information is so wide, to your point, Jochen, it's so wide of a definition that it can't merely be described as one particular industry or even sub-industry within this area. It's a very clumsy chart that covers a lot of different ground. I should specifically dig into information, and maybe I can. But I will say that it depends. Like in some levels, I looked at, because I was looking at a large amount of research, including an article that came out a few years back that examined different occupations, and they found software engineers had a very, very low turnover rate, and it was pretty recession-proof because everybody needed them. And back to the point of the improvement of AI in those places, that may actually not be the case, because what we're finding is that ultimately when there is a technological advancement, how do you see that advancement filter through the economy? You don't wake up the next morning and people lay off your job. People lay off your job because of a recession, and they don't hire your job back. And that becomes how we develop this. But I will say there are so many barriers in place that even something, and I always love this example of using the telephone operator, we solved the technological problem of needing an operator in a telephone in the 1920s, yet we were still having operators in the 1980s. There are many frictions in place that prevent a technology from immediately impacting the size or entirety of the ecosystem that it's behind. And so that is some comfort because that series of decades that happens does prevent or limit some of the immediate transitional effects. And so this is an interesting question. Very, very good stuff. Oh, yes, you're right. I mean, they are in some senses. People are choosing not to rehire most often, or in many cases, and use Canva. It is a tool and it is something that people can use. And it is something as well, but it's also improving a lot of bureaucratic productivity for us nonsensical, low-level bureaucrats inside of an educational system. So I will say that even if we call this, information as defined by ONET, very interesting. Very interesting stuff. Good link, Melanie. Solid. Very nice sector. So I'm going to grab a screenshot of Melanie's link too, if you can't see it and you have trouble getting a hold of it. Where you're operating machinery, where you're operating Canva, maybe Canva machinery. This is a great chart. I'm going to do a little street finance here, do a little copy, a little paste, put this bad boy in here. Includes theater ushers. Oh no. Oh no. That's that's fantastic. So let me share, make sure I'm sharing the right thing here. Let me go back here. 1 second. So, I mean, it is information. Excuse me. Where's my seat? I can't help you. So this is some of the link that Melanie pointed down to. Looking at this, employed by the industry, occupation, projected growth, news analysts, motion picture projectionists, broadcast announcers, technicians, little or no change, producers and directors, editors, ushers, sound engineering technicians, advertising sale audiences, all of these things, media, projected job openings in general, you can see, relatively speaking, they're there, but they are in decline, much like this. So it's a lot of places. Costume attendance. But look at the projected growth rate in costume attendance. So, Melanie found a gold mine for you all today. I hope. I hope. I hope you're down. It's going to happen. You too. Albert's list. I mean, I'm thinking there's like, what do we have in the audience today? Let's say 30 people. As a consequence, think that's if you get in on that costume attendant ground floor. I mean, anything can happen. Big money in cosplay. I know. I pretend I'm a professor every day. Mike, I'm talking about replacing tools. This is fun. Good stuff. Good discussions. Keep discussing. Next on the thing, letting the cat out of the bag. So let's talk about this. I had another great question, and I'm trying to reference the question specifically so that people can feel beforehand. They get question 7 from the sacred pre-meeting Albert's List questions that were sent in. How much longer before all the buffers run out and inflation jumps and the economy seriously deteriorates? Whoa. So it doesn't have to seriously deteriorate. And I love the question, though. How much longer before? When are we going to see the destruction of our society? I have another one that's actually similar to this, which I really valued because of the inherent darkness that was within this. So I really, whoever you are, thank you so much. We are biased as a news cycle towards viewing things catastrophically. Things are process-wise and process-driven, and while individually we experience many joys and many catastrophes in a given day, economic news can be very sensational. And people look at this and they say, well, if tariffs are bad, why are we seeing no hard data on this? And this is very true. And so if we look back, since this is from Goldman Sachs, on the left-hand side, if we look at the evolution of economic data in the early days after key economic catalysts, so the announcement of tariffs or something else, or another thing that happens therein, often on average, economy-wide hard data, the stuff that I report on in jobs data, is often stuff that does pretty well for a longer period of time, months into post-catalyst. And then soft data and expectations and current conditions ultimately meet up with hard data at some point in the future, but it takes months to do so. Currently, we're in this sort of episode, which is very interesting. So the hard data still chugging along. Hard data, job index is going. We still have jobs. People are employed, unless you're in certain technology sectors. And things are going well, and people are too soon. And people are moving up the ladder. On the other side, though, all of our soft data, looking at economy-wide data, GDP prints, all this other stuff, what producers are doing, what importers are doing, all this other data is bad news bears, right? And so we're tracking low on all of our soft data and our current, especially our softest of soft data. Consumer expectations is tragically low. People are really down. And some of that we self-inflict on ourselves because we were like, oh, because I do over 100 media interviews a year because of a bunch of slow news days. I was on Marketplace the other day. And they have these things, and they're like, they always want me to maximize the negative downside. And they say, well, Reilly, this sounds like a catastrophe. It's a terrible thing. And I'm like, well, it could be, it could not be. And then you have to really, you got to really think about it. So when you go forth, oh man, Jessica, dropping some facts. Canva doesn't make everyone a designer. So we got this. And this is a normal delay that happens. So back to your question, when will we see the following things? So we know that when we have tariffs, that does have an upward increase on prices. We know tariff reduces trade. We know that tariffs create situations that are adverse to the economy in themselves. Now, we also know that the consumer strength is weakening at this moment, and we've gotten a position right now where people are not only not optimistic about the future, but while we are still substantially below the 2008 levels, people's fiscal health is still deteriorating, which is why I can't get behind the idea that we're going to rock and roll the economy in a few years until we see some improvement in some of this deterioration we're seeing. So people are deteriorating. The top 10% of spenders are responsible for half of all of the economic spending in the economy. About 70% of our economy is indeed consumer driven. And so put those facts together. Yes, if you're in the bottom 90%, you're feeling the pain. And if you're in the top 10%, you're spending as much as you can. And that's keeping us going. And there are people, of course, keeping up with the Joneses. Michael, that's a good point. I know lots of people that can't make it on full-time 9 to 5 and people having school, work at night job to pay rent. Absolutely true. And so your experience varies depending on where people fit in their jobs and where they are in the income sector. So you've got this, and the question is, when will tariffs impact prices? Well, we know already. I'm going to go into a couple more slides about this later on. We are looking at some PPE stuff, some other things coming across that say, yes, firms are feeling it and they're responding accordingly. The second thing is, which is really interesting about this, is we're seeing all of this downward angle. It's hard that this won't result in price increases. Even if they're minor, they don't improve our trade situation. One nefarious thing about trade over the long run is that it reduces competition in an economy. We go back, of course, and I quote this, I think, every time, but the 2009 tariffs that we put on China for tires, to the tune of about 30%. That did increase the price of the Chinese tires in the United States, but it increased the price of all tires, including the American ones, about 3% because it had lower competition. And so that's an interesting aspect. Jochen, this is interesting. Full-time job at night, payroll numbers increasing, everyone's working a fourth job. That's true. Jochen says, it's Michael's point about people having to work multiple jobs to get something that has always been prevalent in the US, or does your data show this has become significantly worse in recent years? It is true. So there's a few observations to make. So it's true that this has happened and people are engaging this way. There are a few, the data on this you're trying to metal out something very specific because we have, for instance, our employment samples are always based on surveys. Surveys themselves are prone to different sample biases. But assuming the samples themselves are more or less statistically accurate, we are observing that the amount of hours people are working is variable and potentially, this is tricky. Hours worked at a singular job that's reported by an individual occupation is going to be different from others. We've seen an expansion in part-time labor, and that would attribute and that would agree with what we've seen, what Michael's saying, which is that people are taking on additional jobs. And I do think that is, in many cases, what's happening. Albert says, I'm pulling my CEO up by his bootstraps. Trevor says there's also gig work, and that often falls off, to Trevor's point, the survey. So there's two big surveys that we ask. One involves asking people what they're employed in, and the other one asks firms. And if you're doing gig work, you're not counted on the firm side. And so we likely underestimate gig work in that capacity. So gig work, including my little sideshow consulting business and other people's business, is a big deal for a lot of cases. So there's gig work and what positions are offered and marketable to people to accept as roles. Absolutely right. Good questions. Good stuff overall. So back on the doom spiral, since we're talking about this, question one on my Albert sends me these questions and I just love reading them. Are we seeing signs of collapse in the current state of the economy that was built on globalization, which we are now dismantling? Pre-climate change, we've got tons of climate change, and pre-AI, ain't nothing but AI all the way down. So what do we do with this combo of these three things? Does this mean we're unraveling? And so this depends how we approach that question. So are we always in transition as economies? Yes. Are these things costly and terrible? Yes, actually, independently, all three of these things have big economic effects. And so there are some concerns overall. So on the left side, let's look at the bad news. On the right side, let's look at the good news. So let's look at the Brookings Institution data. Global GDP growth, obviously after 2020, coming back in 2021 to a greater pizzazz than it had in previous years. Since then, it's been falling off. We're dropping at 2% globally. That's not too good. Geopolitical conflict. It is raining geopolitical conflict, all kinds of shenanigans that increases volatility and uncertainty. Bad news bears. And not least of all, of course, let's talk about climate change. Yes, it's real. I don't know how many papers I have to show you, but the number of disasters per year has increased. The cost to insurance, though, have insurance against those disasters has increased. And the number of millions of people who are affected by different climate change scenarios are indeed vastly and great. And I don't underestimate those things. So those things indeed all are happening at this moment. Is it yet something that will cause an unraveling of the economy? And I will say no, but we're in for a ride. Economies are cyclical. The economy is the study of all that we buy, sell, and what we do. It's the study of everything, how society works. And so when we look at this way, although we have difference in agreement about how we think economies should run or how they should work, none of these are the death knell to the world, and we're not going to be stomping about in some, Last of Us type of apocalyptic scenario necessarily anytime soon. That'll be funny. Reilly makes a prediction. No apocalypse. There's an apocalypse in one of those things. But I will say that you have to be thinking. So we live in a spin cycle of negative news. All these stuff is bad. I want to point out tariffs are bad. Globalization is generally, it can be a good thing, but it rewards different people at different rates. Pre-climate change, climate change is a bad thing. But again, it's itself not going to undermine us, even if all the ice caps melt in the world and all the economic costs are absorbed. The economy, some version of whatever the economy will still be humming along, which is a terrible thing to note. And I'm not saying that any of that is ideal. And AI, of course, could go both ways. It could improve our productivity to a level, but it also could cost jobs depending on how quickly it is done. And it's costing jobs now at some point out. Now, if we look at other positive aspects, though, since 1990, we have decreased the number of people living in extreme poverty by region. And the whole question is, can we still support this and can that still happen? Most areas of the world, with the exception of sub-Saharan Africa, are showing declines in extreme poverty over the last 30 years. That's positive things to talk about. And that's bigger than you, me, or whatever I can say about the economy, wherever the economy is going. And so when we think about these things, we think about efficiencies and technology and resources and energy and how we need more energy and we need all of these things. We're sorting ourselves out in a very long-term horizon. And there are things that can happen that are devastating. War is a devastating concept. When you see countries pull back from economic development, it's often through things like war and geopolitical conflict that happen in such a way that they devastate an economy. And on the other side of this, there's no surefire way to do this, but left to your own devices, and if you can maintain relative peace, and within, to a certain extent, regimes that are themselves not genocidal or oppressive in some way, you can grow as an economy, although albeit at different rates. And so I'm optimistic about the future of the world, although temporarily we have very little things. So I would say that we're not seeing a collapse, but we are seeing. But I would focus on some of the other things. People do these things. We have jobs. We make jobs for ourselves. Much of what we do in this sort of is a magnificent effort in self-sorting. Hasbro has recently fell victim of several Diddy parties at once. That's fun. Terrifying, says Michael. I love it. So how will tariffs affect the global economy? 2 questions on this docket about tariffs. Number 3, how will tariffs and the general chaos impact the economy? Is there method to this madness in terms of end goals? Let's talk about that. And Q6, what countries' economies will be least impacted by tariffs in a global recession? So the fun part of the quick question 6 answer is countries that don't trade a lot won't be impacted that much globally. And so you're looking at a whole slew of the lower and developing world, or the very much the underdeveloped of the developing world, that don't engage in vast amounts of international trade and remain themselves outside of the scope of that world economy. But in Q3, what are we doing and what's happening? And I point to this chart again on the right, this so-called figure 3, average effective tariff rate by industry. So in 2024, we live in a world, at least in the United States, very similar to other parts of the developed world on the left, where tariffs in general are about 1%, 2%, sometimes less as a percent of application to all products. And then, but you've got a lot of variability. And so you've got by industries, things like fabricated metal, apparel, leather are tariffed higher than textile production. So even before this year, we have tariffs, of course. Tariffs exist in different industries, but they're very low. And so one of 2 things happened. So President Trump came out and he said, well, trade war against everybody else, and those countries will have a choice. They can negotiate or escalate in terms of increasing what those tariffs are against U.S. products and reducing our exports as a consequence. And so across the board, President Trump made a very strong strategy to do this. Now what this does is it signals, so from President Trump's point of view, it signals a dedication to American manufacturers and protection of them against foreign parties. Now, the hard part about this is back to what I was saying before, is when we protect our industries from competition, innovation drops. I am in the finance and innovation department. I write papers around innovation. We talk about it all the time. We know what makes good innovation and bad innovation. And I will say that one thing that you need for innovation to work effectively and meaningfully is competition. And so when we cut off competition, we innovate less. And so then what is your comparative advantage? In the United States, our products could be sold because of technology. They could be sold because of other aspects that are likely not tied to labor costs, as they would be a competitive advantage in, say, a place like Vietnam, where you have a population that often, for labor and factories, can subsist on less. And so as a consequence, you've got tariff policy right now increasing the cost of products to protect American manufacturers. But the nebulous part about this is when you protect one industry through tariffs, you lay off all the other industries that's part of. So for instance, if I want to protect steel, I put US steel, I put tariffs on international steel. That increases the cost for cars. And although I save 1,000 steel jobs, I'll lose 2,000 jobs in other places. We're back to the tire example in 2009. We protected over 1,000 tire jobs. We lost almost 4,000 retail jobs because people bought fewer tires. And so this is the challenging part. So Michael asked, why is it a good idea to tariff things like coffee and mangoes, things we don't make? Very good question, and in particular as well. It's not a good idea, Michael, because we don't, it's not a good idea. I'm not a fan of tariffs anyway, but if you do coffees and mangoes, there's no way here in my modest homestead, I can set up a mango growing climate or something that was beneficial to build the American mango industry, because climatologically, it's impossible for me to grow it here at any cost that's meaningful for people. Exactly. Michael, I won't quote you exactly, but you are, you're not wrong. I hate tariffs. But I'm glad we share that. We share this together, and that's good. So come on me in a tariff dislike adventure. And so where is he going with this is one question. And so there are two things at play. And so I'm thinking about this in the most charitable version of this, is that the president believes he's exacting. Can he one idea is the president trying to give the United States a better tariff policy than what we have now? And it's always possible to imagine a situation where countries, accept our products, our exports, and lower barriers to our exports on their trade. But our biggest trading partners are developed world economies, and they already have low tariffs on our products. And so I'm trying to figure out what that best example would be. That's my counter to this. Another thing is it's bluster, and he's trying to extract other political arrangements, other things, an occasional plane from Qatar. Whatever happens, you have another geopolitical tool. What's interesting about this presidency is we're using trade as a weapon, whereas I think most of the post-war era, we have generally viewed trade as something that is not a weaponized thing and something we desired to reduce the boundaries in. And to that point, what it's really the other nefarious part about this is it's undermining support for the U.S. economy. It's undermining support of the dollar, which we benefited from since 1944, since the Bretton Woods Agreement, being a reserve currency. And this is really undermining those things. Jochen says, can you estimate the effects of insider dealing with our now openly flourishing oligarchy, such as SpaceX getting major government contracts without any invitations to tender? It's terrible. So SpaceX, like anything else, and this is the downside on this, is even if you're looking from a position of what makes technology or what makes the Silicon Valley experience great, it was, and I don't mean to go back in time, but internet in the 90s, early 2000s, or startups or technology, it was viable because it was competitive. And you had a lot of bad actors in there, you had good actors in there, but you had an incredible amount of competition in this industry. Right now, we just don't have the saturation at very big levels of that same level of competition. And so you get companies like SpaceX or Elon Musk and all of his associated other companies operating in places where they are very similar to the robber barons of old and reducing the competition of other firms for the same contracts and the same advantageous benefits. If you are serious about improving the economic situation, build competition competition, encourage entrepreneurial investment, encourage competition, encourage people to move between jobs, and the best and the brightest will go and build products and services. Now, that itself is this is the downside, right? So, yes, free markets, but at the same time, free markets do tend towards, as you point out, oligarchic or oligopolies. And so as a consequence, that's why regulation can step in and ensure that markets are free so no one individual firm has too much power. Michael says we lost tariffs as corruption. We know this from the past. It's true. One aspect of tariff policy, too, to Michael's point, is that it does leave the beneficiaries of tariffs as individual companies who are able to lobby the president precisely to reduce tariffs in individual industry, which is kind of a bonus for executive power. Marcia says, I joined late. Have we discussed the impact of the U.S. credit rating downgrade? No, Marcia, but that's a big deal. Moody's coming out and downgrading the U.S. credit. We had a stellar credit rating, now downgraded slightly. Still viable, but at the same time, Moody's is acknowledging what the other two major credit rating agencies did in the past, which is the U.S. has trouble on the horizon in being fiscally sustainable and able to pay our long-term debt obligations, which are substantial. Every year we spend more than we have, we can take in as revenue. That's a deficit and we have to finance that by issuing bonds, raising that money, and then selling that bonds to anybody who'll buy them. So that's you, me, other countries, people. It's in our 401ks, it's in our portfolios. And the collective amount of debt that we hold year after year after year after year is the national debt. And right now, 36 or so, $38 trillion, something like that, rock and roll. Melanie says, we failed fast back in the day. Albert says, you're not wrong. It's not quid pro quo unless it's explicitly stated. Otherwise, it's just a gratuity. Yes, come. Let's go yachting with, it's just Clarence Thomas. Michael says, IT hated monopolies, but now covets them. Michael, that is exactly correct. And that's the problem here is that, yes, IT hated monopolies, and then eventually you exist long enough that you become the man that you're trying to destroy, which is just the most tragic lesson that we're witnessing in all of this. Marcia says, in addition to rainbows and unicorns we're discussing. Albert says, the only moral monopoly is my monopoly, IT. Also, PG&E. Can go eat a monopoly. That's true. Utilities, of course, often have to function as de facto monopolies because we can't run 20 or 40 different power lines. So that's why they're heavily regulated. Although to that point, PG&E, California does stand out. I was just doing, I had an analyst call me from a New York bank yesterday because of some expertise I'd written up on some utility companies. We were talking about some deals that were going down. And the analyst was asking, and, basically, how what's your take on this and what's your take on that? We had a long discussion about this, but utilities in general are fascinating things to study because we have these state-sanctioned monopolies to manage things like water and power and other things, and gas, natural gas, or other forms of heating. And different states have different success in this. California is interesting because you have one of the lowest individual per capita uses of power in the country, but one of the highest power bills. And then you have other states like Texas that has a mid-level power bill, but one of the highest amounts of individual usage per capita. And then you have me here in New Mexico, which has one of the lowest per capita as one of the lowest bills. So we're just hanging out down here, rocking and rolling, making wind happen. And so on that same spirit, Americans are paying the cost of tariffs. This is Joe Politano's chart. Chinese import prices have barely fallen, implying Americans indeed are primarily absorbing the costs, and particularly American firms initially. And we're seeing that already from companies. Subaru coming out today. Obviously, the Japanese company Subaru, of course, the name in Japanese for the Pleiades star constellation in the sky, which also features prominently on their logo, came out and said they were increasing prices due to these economic costs. You're going to see that across many international car makers in the next few months. And so it is anticipated these prices will be absorbed. And it's a big deal. Yes, Michael, we got to figure out our revenue problem. We can't do this forever, to your point. And as bad as things are now, it's going to get much worse in 20 years, 40 years, 60 years if we can't figure that out. We have to figure out costs. So I had another question about how do you see economy and tariffs affecting jobs in the healthcare industry? So while healthcare has been adding jobs, they are not necessarily the same jobs that you're seeing people apply for or have the skills for. So if you're in healthcare, but you're a marketing manager, or you're in healthcare, or you're, involved in or you're a physician, or you're in healthcare, and you're not somebody that's working in billing, it often is it's very diabolical, because the jobs they're hiring, those big number jobs, are often jobs that have high turnover, that involve jobs that are often lower skill compared to others. And so a few things about this right now in tariffs overall. So I looked at some data, looked at some numbers. Tariffs on medical imports drive up patient costs, strain budgets. Now, hospitals are already incredibly expensive things, but they're not always profitable to the right point. All hospitals have an operating margin of about 5%. We see this all the time. People often overestimate things in terms of profitability, even if they're expensive. But we find big variation between them. Rural hospitals don't make a lot of money. Urban hospitals make more money. Hospital ownership, for-profit hospitals do pretty well. They make about 14% of an operating margin. And we're seeing a lot of variation here. And so because the margins themselves aren't 20, 30%, these little costs have a big effect on the ability to drive services. So a lot of stuff that we import from countries like China, a lot of medical goods, things like syringes, which are subject to this 245% tariff, do have consequences for us. And about 94% of healthcare administrators in a recent survey expect to delay equipment upgrades due to some of these systems, and major systems have enacted hiring freezes. Pandemic spurred manufacturing has waned, and this has made us dependent on very fragile international supply chains. Increased costs and uncertainty may reduce hospital hiring capacity, expand workloads on existing stuff, and then pharmaceutical concerns in general. Not even to say generics, antibiotics, cancer, heart medications. This all increases because a lot of that's made overseas, and inflation and tariff costs adds, of course, financial stress. And 82% of healthcare leaders anticipate a 15% rise in hospital operating costs within 6 months. Bum. I know, you're absolutely right. Michael, nurses are grossly underpaid for the work they do, and especially the work that are in them. And I'm not advocating that they're tight, but they will. This is just looking at the question. They're looking at how economy and tariffs affecting jobs in the healthcare industry. And that's tough. Jochen says, what's the reason that for-profit hospitals are so much larger? Do they serve different, wealthier demographics and charge higher prices at similar costs? Something else? Well, as you know, one of the challenges about the healthcare industry as itself is, while it does operate, this has been interesting. There have been efforts. So when we compare, if you wanted to buy a true free market good, like if I wanted to buy a book or a notebook or something where I wrote something down, and this one came from Daiso, because I love the I love the English on the front. It says the scent of wisdom. But this notebook, I would compare this against every other notebook available, and I'd have 20, 30, 50, hundreds of choices. I can find the best and most niche product for my needs. Healthcare doesn't work that way. Famously, before President Obama's administration, there's a study that came out, so mid 2000s, that was trying to find the cost of a hip replacement for an uninsured person in just the Minneapolis-St. Paul area. And the hospitals, even within that same metropolitan area, varied from $10,000 for a hip replacement to $100,000 for a hip replacement. And that's an incredibly basic surgery that can be done and repeated. And so because you have nuance involving a lot of different potential services, some of which are similar, but different outcomes, and no easy way to compare prices on these things, we don't really have a market for comparison. And so, Jochen, to answer your question, because the market I can't free market a hospital as much as I would like to. And because of the intermediary of our labyrinthian insurance system, who operate as the primary negotiators as to what something is or should potentially cost, whether it's through Medicare, or whether it's a Blue Cross, or whether it's an Anthem, whatever it is, you're ending in a situation where we have such a complex market in this area that a quote unquote free market is just impossible to achieve. And because of that, you're going to get for-profit hospitals recognizing and maximizing their gains on this. And also the influx of private equity and other entities that are turning hospitals into profit centers is a thing. That's a real thing. Marcia says, look, if we limit eligibility for vaccines, we won't need so many syringes. Pretty good, Marcia. That's the type. That's the comments that make my day. Love it. Michael, did you know that when hospitals are short on nurse, they pay over 150 an hour for nurses on employment agencies? Oh, that's so unfair, isn't it? Terrible. Interesting stuff. So the one question is though, our firm's always making tons of money though. And I mean, I'm not throwing, I mean, this is the fun thing. Always and yes and no and markets. So if you're selling things like consumer goods and you have a lot of potential competitors in a place, that does have the benefit of driving prices down. Walmart has about a 3% profit margin, but people think that the US firm has about a 36% average, a 36% average profit margin. So yes, but to that point made earlier, we do distribute where those earnings go differently. And a lot of times executives make tons of money. My entire PhD, my PhD thesis was written 3 different essays on executive compensation and how that affects things. And so sometimes those can be very inefficient, and that is a nuance of our market. Back to this as well, we're going to talk a little bit about the housing market. The housing market's undergoing a widespread softening. So if we look at 1 year changes between April 23 and 24 versus 24 and 25, notice that this time last year, we were cruising with mainly blues. Blues are positive numbers. It's the Zillow scale. I don't make the rules. They need Canva. So when they do this, maybe it is through Canva, that they do this, they have this whole sea of blue of prices that are rising. And then on the right-hand side, you'll notice all the way from Seattle on down, following a big kind of smile down to North Carolina, you've got declining prices across the board, all through the Sun Belt and et cetera. Even in California, year-on-year prices having dropped, or month-on-month prices in the last month, fresh off the press, minus 0.42 minus 0.42% in the last month. So if you're looking around at that inventory, looking for that dream home in Atherton, now's your time. Other things to note about the housing market. So, of course, higher interest mortgages are on the rise. We have been talking about this for a while. We noted that one of the reasons that consumers weren't as stressed as they could have been back in 2023 as rates were increasing was that so many people had these really low mortgages. As it turns out, right now, we've seen because of churn in the market, because of houses flipping, because of people buying new homes and moving around and such, that the number of mortgages that are now less than 3%, formerly 30%, formerly like 34% of all households has dropped to 24%. And the number of people with mortgages greater than 6% has increased from just a single digit low of about 4% to almost 20%. And so this is going to affect people's spending power in the coming years. And it's a delayed burn that we've been seeing with high interest rates. Home builder sentiment. But are we going to build more homes to offset this? No, of course not. Home builder sentiment is also low. Oh, no one is more depressed right now than a home builder. Home builders are the most down they've been since the 2008 financial crisis. So, oh boy, what an amazing adventure. So there's that happening as well. Now, this is my favorite part about life is eventually you reach a certain level of C-list celebrity status where you can make your own affordability index. So John Burns, makes an affordability index called the Burns Affordability Index. And it's an intrinsic value that looks at the house market. But what I like about it, though, is he goes back in time almost 50 years. And he looks at a measure of intrinsic housing value based on income ratios and how much you're spending for a house. And so under this and what the interest rate in the market would be. And what he found was that things are not very pleasant nowadays. Colin, what's your take on life?
So going back to what you were saying earlier and now this slide, what I just heard is housing building is low while the housing has never been so unaffordable. So is
Correct.
housing market experiencing its own stagflation?
In a form. Oh, I love that, Colin. I love the angle and I'm down for it. So I like this. So yes, in a way, because what happens right now is because the overarching factor that connects all these things is interest rate and mortgage rates. And we've got demand for housing out there, but people can't afford the housing stock that's existing. And as a consequence, we've seen builders who have overbuilt or have looking at some of these prices coming down saying, look, it's going to cost me this much for labor to build out and create these things. I'm not seeing demand for new homes. because when you buy that new home, you got to put more down for that down payment. And at this particular market with these mortgage rates, they're finding it unworkable. So even if we were to improve affordability by increasing housing stock, builders are just not doing it. A form of stagflation. I love it. You're absolutely right, Colin. That's a key observation.
What will get us out of this builder stagflation? Is it just lowering rates or what's going on here?
I was laughing at Melody's comment. They should become costume attendants. But the rest of this, so what's going to get us out of this? So we got to figure out a way. There's a few ways to do this. One of which, of course, so somehow housing has to become more affordable. Now, there's a few avenues and levers that we pull for that. One is that mortgage rates have to come down, but I'm not seeing an immediacy to that at all, especially given that mortgage rates often follow the 10-year bond yield, and the 10-year bond yield has been rocking and rolling these days. And so I don't see that as being this way. I think good building, and to this point, Michael, to your point, building housing policy is important. We have to make and incentivize we have to change the whole calculus of what building means. So that means better zoning, getting rid of lot sizes, parking minimums, all that stuff that adds shenanigans into the matrix. And so until you can actually get people, there's many different types of government housing that we can build. And Mike says governments built houses in the past. You're true. One aspect, though, is because we've underbuilt for so long, is that the scale of building that we would have to perform is just more vast than any local, state, or national government could reasonably perform in the United States at a reasonable cost. Maybe national, we could maintain something that was meaningful, but that often creates disincentives too. And so it's probably a combination of both things. It's good housing policy, but also and encouraging building and doing all that stuff with different mortgage financing authority entities. But then at the same time, you've got to build this other side and improve the development calculus too, and that'll increase it at scale. And it's just not there. Waiting for baby boomers to die. Get out of your available houses. Well, I don't know. Maybe it's interesting in housing stock. I will say, that's an interesting question, right? Because it's baby boomers, but it's also what is housing demand, and immigration's good for the economy. That does put pressure on homes, and if we built homes, that wouldn't be a problem. There's a lot of issues with this. But back on this to your point and everybody's point, it's never really been worse. We can go back, and my other Reventure Consulting has an inflation-adjusted home price number. It is terrible. I mean, I'll reiterate, the prices are terrible. But on the other side, those of you who are looking in the yacht market, looking for that second home, your third home, your fifth home, you already have 12 homes right now. You put up a nice fence around them. You just kid rock the place. Demand for second homes has fallen to a 6-year low in 2024. I just don't want a second yacht. A second home. Marcia says we need infrastructure too. China excelled at building us out. Absolutely right. Melanie says we can all live at the villages. Aaron says we want intergenerational wealth. We want boomers to live. I am nobody's heir, Aaron. So I appreciate if you are. Leave me in your will, people on Albert's list. Collect. It's a bunch of old coins. I don't know. It's a bunch of old flash drives from like 2007. Michael, if we make high density housing like in Amsterdam and narrow the streets, we get more loads. Agreed, Michael. You're preaching to the choir, and I love it because, Michael, I have been talking about that for months now. If we made things happen, if we built zoning and built, especially in the Bay Area where you've got a limitation on land, build up, you will find an economy that is revitalized. But closer to home, if you're living in the San Francisco, Oakland, or godforsaken Fremont areas, you've got the following metro data to hold. Inventories are rising. People are offering their home for sale at a level that we haven't seen in 2025 in the last 7 or 8 years. And that's been very, very remarkable to see. Now, what does that mean? That's going to put downward pressure on prices because more people in the market does put downward pressure. So look at this jewel I found for you. So those of you looking for homes right now, I found this great 800K home for you out in Redwood City. It's a garage. It literally is a garage, but it's a 570 square foot garage. Look at that. And it's got a fence.
Jesus Christ.
But it's coming down in price.
Oh my God.
Make your bids now.
That seems worse than a freaking studio.
Albert's List headquarters, right there.
Oh
And I'll share
God.
it.
Oh man.
All for a living. How do I use my microphone?
I oh man.
So, consumer confidence. Largest decline since March 2023. Still going down. Tariffs are a problem. Home sweet garage, says Marsha. That's a fun thing. It's kind of really they really spruce it up a bit. I like though if you look at the listing, it's fun because there's a door there, but it's a house. So I hope they restored the door ability so I can just like I want air in my living room and I just lift it up and just make it happen. Consumer confidence, largest decline since March 2023. This used to be tied to spending in a way that we haven't seen yet. So again, a tale of two economies. If you're rocking and rolling and keeping up with the Joneses in the top 10% of the income stream, you're doing okay and you're spending money. But for the rest of us, we are in a rough situation. The rest of people around, they're in a rough spot. Now, let's talk about this. And so this goes back to actually a point that Michael brought up earlier about the question of US federal government debt and looking at it in a few different cycles in a few different ways. And this is a relatively conservative estimation of our current debt level. Most of the other ones, if you looked at World Bank, we're well above 100% of our GDP in debt. But the trajectory is not good. And so we're at this very important point. And when we have all this debt, we pay interest on this debt. And it used to be about 6% of our government expenditures. Now it's more moving up to the 8 and 10% range, and it's likely going to continue to rise into the double digits as a percent of our tax money. So the more money that we're doing to service our debt, the less money we can do to spend on the things that we need, particularly at a time as our society ages and we need to somehow accommodate Social Security, Medicare, and everything else. And so this is a big deal. And so while we look at budgets and other issues and looking at these cost control measures is fundamentally important, if they're not moving the needle and we're still spending more money than we have, which we are, then this will continue to be an issue down the line. It's not always a given. We're not going to be Greece tomorrow. And the United States has many advantages due to its sort of post-war economic dominance that it still benefits from, including the dollar. But like other high indebted countries, we're going to face fewer options in the future if we don't figure this out. So it's not a tomorrow problem, but it is within our lifetime problem. Now let's talk about credit utilization. What's the credit card situation in the economy right now? So the good news is your credit card limits are going up. They've been going up for some time. I was just reminded again from Chase that my credit card limit was expanded. I didn't need it to expand. I didn't want it to expand. I'm not going to buy a bunch of Teslas on my credit card anytime soon. But the credit card limit nonetheless has been increasing. Balances have also started to go up with them. Our credit card balances are now about at the all-time high, and credit card utilization as a consequence, because although our balances have risen, our limits have risen more, our utilization numbers remain small. Now, what does this mean when it comes down to things? We are noting that the trajectory of delinquency is rising. And here on this magical rainbow bright infused chart, if we look to the right, we're looking at a scale from 1999 to 2025. All the good years. So in this particularly thing, we've got people who are 30 days late in green, 60 days late, 90 days late, 120 days late, and then beyond that, severely derogatory, which some of great to have as a t-shirt. Great handle, actually, on your next Albert's List adventure. Although these values are not what we've seen in the 2008 financial crisis, the trajectory continues to deteriorate rapidly. Look at the speed at which these are going up. And so it took years for this to unwind before. I expect that we're going to see continued increases here for a while. Now, moving to equities, we always have people asking about stocks. How are stocks doing? These are the stocks you should have bought 5, 10, 15, and 20 years ago, just for kicks. I was trying to follow things through. Of course, last 20 years, if you bought NVIDIA 20 years ago, you would have had a 69,593% increase. So find your company where you work on this list, and hopefully you got in on the ground floor.
Oh my God.
I like the top performing stock over the last year, super microcomputer in the last 5 years, I guess. Microcomputer one, not good enough. Super microcomputer, top notch.
But even Nvidia is underperforming compared to Bitcoin, right?
Amazing, isn't it? Crazy.
Yeah, which is amazing for Bitcoin.
It is amazing for Bitcoin. NVIDIA dominating the market. Where's trying it for 2 times? All right. So in or out inflation. April producer price index plunged by about 0.5%. So this is interesting. So people are like, show me the inflation. When are these things happening? Are we seeing this in the market? So you got to really search for this. And this is pulled from Bloomberg Terminal. But you got to go back in here and you've noticed that some of our producer prices plunged by 0.5%, which is the biggest monthly decline since COVID. So basically what this is showing us right now, producer price index in terms of demand, this dropping demand, higher prices, we're seeing some of these effects come through in April of some of tariff policies. And if this continues, this will be passed on in the form of consumers. Melanie says, monster beverage for the long term. Now back in San Francisco and San Jose, here's the deal. Because our last session was a little bit more than 3 weeks ago, I don't yet have the April numbers coming out for San Francisco or San Jose. I pulled these out this morning. So we've got basically the same numbers we had before. Big picture is, apart from it being an amazing eye test overall, you've seen the number of physically unemployed people in San Francisco and San Jose both drop slightly. Unemployment rate came down to 4.1%. Again, unemployment rate only counts people who are looking for jobs. So if you left the area or you physically dropped out of the market, you're not included. But you're looking at still nothing steady, nothing shiny to note, other than manufacturing jobs in the Bay Area are still running 7% where they were behind last year at this time. Information is still running 3% where it was behind at this time. Across the board, there are very little sectors where you're not running behind as a percent. And so this is the big deal. So questions. So let's bring it up. It's 7:10. Drop that down in 70 minutes flat. We've got some interesting things thrown here. I don't know. I like how this made it work, and I like that it aged me appropriately, as every one of these meetings does. I'm all for it. So this is what we got here. You're riding a dragon in the right one, Colin, kind of, or the person that thinks is Colin. I can't.
I am very impressed at what it came up with for my luck.
That's all we can do.
Uh, did we answer Michael Lyons' question?
Oh, we did not. I'm sorry. Michael Lyons. Thank you. Trump threatened Walmart if they passed on the tariff costs. Trump threatened Walmart if they passed on the tariff costs. Target then ready them. Basically, Trump said, of course, to Walmart, eat the costs from tariffs. How well will that policy work for that or other businesses? It won't, because businesses often maintain profit margins. And while we get in the nuance and the nitty gritty of, yes, corporations, of course, they often maintain lower profit margins than we expect them to. And they often use the money that they have in ways that an outsider will find efficient, like giving executives huge amounts of pensions. Great article, by the way, if you're looking to read something or fall asleep into. There are these costs will inevitably be passed on to consumers. Like you can't sort that out any other way. And so asking companies to pay for things that they don't have, they're going to pass it on to us. And so that'll put upward price on inflation. It's not going to work. But it's a very valiant attempt at deflecting blame. So that's good. But what else we got cooking? Anybody else have questions? What are we doing here? Let me see if I can find. I keep losing my very slow moving train of thought. Let me exit out of this a little bit here. Let me go back to a normal screen.
It looks like we have a budget surplus. Surprisingly. Let me drop the link here. But the U.S. government having a budget surplus, is this normally a good thing? Is this a bad thing? I'm used to being in deficit. Are we gonna pay off our debt? Are we gonna like service something, or is it gonna go into Mar-a-Lago? What normally happens when the government finds itself to have more money than it expected?
Oh yeah, so in the month of April, yes, Colin, good question. And those of you, it's a great link. Government collected 850 billion in receipts, spent only 592 billion, resulting in a monthly surplus. And it's the first monthly surplus of the fiscal year 2025. In April 22, we ran a 308 billion planned surplus. We do run surpluses often in April due to just the tax policy framework. And so if we go back in time, because April is tax month, people who owe money on taxes pay it in April. And so April tends to be the month where we see these tax surpluses happen. And so it's a little tentative thing. Now, I know the real question is, well, Reilly, does that mean that tariffs are actually working and they're generating revenues? No, because we did have a surplus back in 2022-ish, And we still ran a massive deficit that year because of everything that we cost. So it just happens that we have more revenues coming in than costs in a particular month, which has not happened in a few years, but we're still very much in our budget on the way to running a deficit this year. So great point. Great question. Michael says, I run a high-tech marketing firm. Where should I focus our future efforts? Ooh, I like this. And wherever makes your money, Michael. This is a great question. That's a great question. High-tech marketing firm, marketing. I will say, though, that if you're in the high-tech marketing biz, I will say that people are nuanced. I think you're advantaged because if you can navigate a space that marketing makes the world go round. So, right, everybody needs marketing for every product and service. I work for an institution, educational institution. I'm a tenured faculty member, but I'm in administration now of an administration. We contract out with a marketer, and our metrics to evaluate that marketer are very technically minded. And so the solutions that you'll be able to produce are likely going to be fantastic. And they'll be focused on ways that I think people, especially in this market, who are looking for developing up business or whether it be awareness or products or getting your hands into the right customers, your ability to navigate a space with accuracy, high levels of saturation and hit rates, and making things convert is going to be amazing going forward. So I think you're in a marketing is actually in itself something everybody needs, even in a recession. So I think that's solid. I'm highly optimistic that you're going to make this thing fly. Just remember us when you're making billions of dollars, Michael. Next on this locket, you have Jochen. What explains the very low debt numbers around 2021, 2024? Did consumers spend less, or did they utilize as much of their credit line, or is there another reason that explains this? So going back here to the debt numbers in general, we talking about credit card debts in general. 2021, the utilization. So interestingly enough, Jochen, we can actually attribute this to some of the stimulus packages, the 5 trillion in stimulus spending that came off after to stimulate the economy after COVID. And there was a whole bunch of different bills and various acts that were passed that enabled that. And people used some of that money to pay down their credit card debt and to pay down their debts in general, as well as pausing the student loan payments. And that combination of things improved the fiscal situation for credit cards in this country. So Albert says that seems a bit hyper-specific for your situation. Vikram says, what allows the US to run such huge deficits? Is it magic? Why? Why? Vikram, that's a great question. Yes. Is it magic? The UK, Germany, France have the same leeway? Colin hit it right there. Incredible credit rating, reserve currency status. Most countries can run deficit. In 1944, Vikram, as World War II, and I tell this story every time because it explains the last 80 years of monetary policy. So in 1944, the Allies met in Bretton Woods Hotel in northern New Hampshire. And the United States might as well have just closed the doors because they basically made the following argument. The US is going to be the only economy undamaged by World War II. When this thing ends, we need a new monetary policy to rebuild the economies that have been destroyed by the war. And it makes sense that the United States currency is, because it's big and undamaged, the only currency that has stood the test of the war. And as a consequence, the Bretton Woods Agreement set out a gold standard world, with the US dollar being the only currency convertible to gold, which means that if you wanted to buy oil, you had to buy dollars. If you wanted to buy anything, you wanted to trade with other countries, you had to buy dollars. And every other current country's currency had to own dollars to buy goods, and they were not tradable into gold. And if they wanted to get to gold, they had to first convert into dollars to make it happen. The net effect of that was that all these countries started keeping dollars as a reserve currency just to transact and do business. And right now, even if we look at certain issues, oil is priced in dollars globally because of this. Commodities are priced in dollars. If we look at trade policy, we look at the biggest international currency trading market is London, but the most widely held currency that's in the majority of trades is still the US dollar. The US dollar is held everywhere, the demand is held everywhere. And even after the Bretton Woods system unraveled in the 1970s, the US could no longer support the gold standard. We had too many dollars out there and not enough gold to back it up. People still held dollars as a means of exchange. And so that benefit, to your point, has benefited our economy, kept us in reserve status, and it has given us a leeway economically, where right now we do have some benefits still in our economy, although we represent only a 340 million slice of an 8 billion world population. Our equity market capitalization is about half of the total world's equity market capitalization. It's benefited us by having cheap debt, cheap resources, all these potential benefits. It's been an 80-year bonanza for us. But we keep trying to shoot ourselves in the foot with the policies that we've had recently. And that's going to be a problem. So Jochen says, COBOL's not the problem. Good discussion. Oh, interesting. Michael says it's very possible that no Social Security will come out in June due to the system being written in COBOL, which could be a problem if Social Security checks not ship in June. That's interesting. Yeah, I'm sure we'll figure something out on that point, but it is an interesting economic question. The interesting broader economic question is Social Security in general. COBOL, man, haven't played with that in a little while. That's a fun language to learn. I like to write it in early. If our retirees didn't get their check, there would be a substantial issue. I mean, it would affect everybody's sense. I mean, the fact that our general sustainability of these pension schemes and Social Security is a big question for us. And we're reaching, whether we like it or not, towards the question of some form of privatization for Medicare or Social Security or some form of this. Unless we can figure out reasonably our debt situation. Ideally, from a fiscal standpoint, we should start spending down our national debt or working on balancing our budget gradually in good times. And then in bad times, we can take out more debt to stimulate the economy, or so the theory goes in a Keynesian point of view. But we haven't been doing that. We've been spending more money in good times and in bad times than we have. So what do we do? Do we raise taxes? Do we get rid of tax loopholes? Do we reduce costs, or some combination of all those things? We'll find out in the next 50 years. Nothing.
Oh,
what are we going to do, team? Back to this. Watch our new movie coming out last April.
do we have any predictions?
Jobs report. What's that, Colin? I'm sorry. I was
Do we have any predictions? Like, for those who are in the job market or thinking about switching jobs, what can we help them think about to help them prepare, to help them succeed, to help them, hedge their bets? Because obviously tech is in a weird place right now. Every other week, I'm seeing a new tech company either shed another 3 to 5% or do weird things. And, Albert's list is majority Bay Area, which means it's probably majority tech workers. So obviously the tech industry in a bloodbath, not feeling great, not feeling the best. What can we do to help them prepare and, succeed?
Great question. So Albert's list in general, people in general. So I'm gonna go on a limb here. I'm gonna say be adventurous. Rewrite, if you haven't re-looked at what defines you and your life story, and when you go up and apply for jobs and if you don't have an award-winning cover letter that tells the story of you as a person, that's a little vulnerable, a little interesting, and distinguishes you. If your resume doesn't tell me a story about yourself that shows me why you're an interesting and unique person, rather than just somebody who knows COBOL better than any other person alive. If you upskill and you think outside the box and you engage people and you network and you do other things and you do what makes you joyous and you celebrate it with the world and you do all of these things put together, create yourself an environment where not only are you a unique and interesting person on the table, you are upskilling, you're laterally skilling, you're skilling everywhere of this. You're becoming a better and more nuanced person. You manage, you lead, you develop, you rebuild. You start your own company. You take bold steps. You don't lose hope, is what I would say. And then above that, everything else. Am I advocating running ransomware? Don't do it. Yeah, start ransomware.
Don't do it.
Yeah, don't do it. Don't do it. It doesn't make as much money. Colin tried it last year. It was terrible. So one of those things. No, don't do it. He didn't. No, that's not. He's very good. I don't know. I simultaneously vouch for Colin and no, don't write ransomware. That's your only. Is that what happens next? That's your choice. Reilly said to do this. Now you become what you hate. I get 25 text messages you from a day promising tax relief. Ah, fantastic. Great. So I look forward to it. But really, to your point, Colin, about all of this, though, is that people have a very nuanced perspective. You get lost and locked in to jobs that look like the other ones you just had. You're interesting and you have developed skills, and your skills are valuable in maybe another part of the country, in another industry in the same place where you live. And even if you're confounded by all these things and you're being very patient about these job offers, and it's not coming through and it's not working the way that you're doing, keep doing it. And I think that's the point. Re-educate, reskill, upskill, go everywhere. You're going to do great. You have my ability. I'll write you we'll talk. Send me your resume. Write your recommendation letter. I met him. I met her. Whatever things. They're really good. No, we'll do it. Neurospicy. That's fun. I love that.
Mm.
Actively engaged. Jokin's absolutely right. And the thing is, life is a beautiful thing, and it's too short to worry about all these things. We live in an economy that wants to sort us by value, and this is the mechanism it does so, and understanding the economy is valuable. But you're an interesting person. You have an interesting story, and the journey that you went on is itself interesting. So don't forget that. Don't forget your value as a person. That sounded very negative. I feel like this is like what we say in the bottom of a recession. Don't worry. Don't worry. It's fine. This rat, it tastes very good if you cook it right. I feel like I'm not making a case here, but it's a good point. You are actually an interesting and valuable person. Keep upskilling, keep rocking it. Write me a story, write a resume and a cover letter that says something interesting about you. Try something that you haven't done before. Send it out to somewhere you don't think you'll do it and keep doing it. And make sure that resume rises to the top and practice your interviews. Tell people what you're about. Have a good answer for everything.
So Michael says retraining only has a 11% success rate. So I kind of
Mm.
want to comment on that. And I think one of the things may we're not doing correctly with retraining people is we're probably not helping people understand the ways they can learn. I fundamentally believe everyone can learn, no matter how old you are, no matter what your profession you're in. But sometimes it feels like it might be very difficult to learn because it's not being presented in ways that make it easy for you to absorb it. And this is the easiest time to learn. Um, while AI might be disrupting jobs and industries, AI is also extremely good at coming up with tailored learning plans for you. I am actually using it myself. Obviously, standard disclaimer is you better double check everything the AI tells you. But always just, ask for source and say, hey, here's how I think I'm best at learning, or like tell it, hey, I want to learn this subject. I don't know where to start. Can you ask me a few questions to learn how I am good at learning, and then come up with a structured plan to teach me the subject. And then my goal is to become good enough to maybe get a job in this industry, something like that. Uh, be in charge of your own retraining. Like never wait for someone else to save you, because ChatGPT and Gemini and all these other LLMs on the market, a lot of them are free. They're pretty easy to use. They're pretty intuitive. Um, Learning is extremely easy once you get into figure out how you best learn. And maybe I've never gone through a retraining program from the government, but I'm pretty sure they try to do the cheapest one size fits all method. That's definitely not going to work. And yeah, now is the best time. If you're in a rough spot, if you're in a difficult time, libraries exist. They are free. They have internet, they have decent computers, spend 3 hours a day chugging along at the ChatGPT learning it, and then the rest of the time interview, write a cover letter, brush up your resume, and send out applications. And that is my best advice.
I love it. Colin, great points. Study it and get AI. AI can be helpful too. I love the idea of a learning plan. That's cool. Madeline also dropping the truth in there, and she said it more succinctly than I would. It is true. If you can connect with the person better, you tend to hire them. I've been on that side now for the hiring process many times. Michael's got interesting points here. Everyone should have to go to college. I don't agree with that either, Michael. College happens to be my current industry. I was a banker before I was an academic. But so college is not something I would advocate for everybody either. But I will say, so one of the things we lose about education is why we have it in the first place. Like, what's the purpose of education? It buys us choice. Now we live in prisons of our own design all the time, right? We say, oh, I'm in this occupation. It's the only thing I can do. No, if you've got a college degree, if you got multiple degrees, whatever it is you want to do, if you're training, whatever it is, degree or no degree, it buys you choice, right? Look at what step for a second. What did your great grandparents do for a living? And what did your grandparents do? What did your parents do? What did your great great grandparents do? They didn't have an education. They were often handcuffed to whatever job they had, be it a 14-hour day in a mill or as an agricultural worker in a place where they couldn't do it. And the most marvelous part about the time we live in is to achieve an education that buys us the choice. You can go back and be an agricultural worker if you want to, and that's great, but it's your choice to do so. And I think education, if it's done right, provides you choice. And that's most fundamental. And man, do you want to be Madeline said she wants to be the cat or the potato?
I mean, I like the cats. I have no idea if that's an actual potato. It looks like a falling meteor to me, but now that I'm looking at it again, it does look like there are
It
potatoes.
is a potato. I think I did. I had a lot of issues. I did. AI has been informed by my past habits, and I have an 11-year-old son, and we like to make stories, involving, somebody stumbles upon a bunch of sentient potatoes, and what do they do? And it becomes part of it. Ah, education buys one choice. Absolutely right, John. But then one has to buy education for it, which is our problem. Oh, this is a fun discussion. Ah, people
The
are
way
into.
I'm suggest only 80% of people that are able to have a job, and then we start. Okay. Uh, Maybe I should just host like a webinar on like how I do what I
Ah,
just described. So maybe Michael can kind of see what it looks like in
like
reality. But like, obviously not everyone is able to learn what I just described. Some people are not uh visual or reading based and it only works for topics and subjects that are very knowledge based. That is the inherent limitation of what ChatGPT can do. For example, if you're trying to learn piano, it's better to be banging on the piano. But at the same time, you can upload your own recordings of what you played. And ChatGPT is extremely good at telling you where you're wrong. I recently learned that, which is surprising given it's an LLM. So it's a language model, but it has enough understanding of saying, hey, at the second minute, you played this, in Adagio instead of Pianissimo or something like that. And then maybe it's a great way to be good at using AI in a way that you never thought about. I think that's one of the things people aren't thinking or applying correctly and creatively when it comes to AI. It's got extremely um, high-powered capabilities, but it's currently restricted by the creativity of its users, and that it in itself is not is something I'm not sure how we can currently solve because people aren't sure of what the full extent of what ChatGPT is, and I think half the people in this audience might not have even realized you could upload a piece of your own recorded piano playing to ChatGPT and ask it to critique it. And now you know that. So maybe spend some time to like sit down with ChatGPT and say, hey, what are the actual things you can do? And like talk to it. Well, obviously it's not an actual thinking thing, but like explore this incredible tool and to understand why there's so much hype on it and why the market has drastically um, pivoted to being full in on AI and what it means to realize that we have taught machines how to maybe not be aware, but at least do processed thinking and inferencing, which is an incredible jump in scientific and capability that's now available to consumers at large. And I do believe we are uh, in an interesting aspect of human society history. I mean, future generations will look at this generation as like the great AI, pivot. I think it's just a matter of like realizing we're in that moment and then taking advantage of the technology that is really less than 3 years old, and growing along with it because it is like the next internet to me. You have to learn it. Uh, in 10 years, it's probably hard to imagine a job or a industry not having some form of AI involved. And that is the reality of what we're looking at. So please learn the tool, please interact with it while it's all free, because right now it's free and being paid for by venture capitalists money, and that will not last forever, is all I'm saying. Take advantage of it while it's free.
Oh, I love it. Ooh, it won't last forever. When's it going to change, Colin?
And shitification hits everyone, right?
Uh,
It won't last. It will either not be free forever or it will be free with ads. And by the time the ads get into it, you will hate ChatGPT. Obviously, the best way to use it is to learn how to, learn how to set up your own LLM at home. Uh, it is actually a very interesting exercise. Feel free to Google how to set up your own LLM at home. It's actually a lot cheaper and a lot easier than you think these days. But at the same time, maybe you don't want to do it. But if you set it up yourself, you're gonna have to be the one paying for the hardware and the power cost. And right now, venture capitalists are the one paying for that.
oh, I love this. Good questions, good conversations. Jessica, great point as well. This is great.
Yeah, Jessica.
Good
So
points.
yeah, Jessica, what
Yeah.
can ChatGPT do? It can do a lot. And when it first came out versus what we have now. So I was one of the first people to play around with ChatGPT 22 December 3rd. That was when I made my account, like 4 days after ChatGPT came out. This was a GPT-3. And at that time, it's it that version is like a toddler compared to the one that you have available now, 4.0. 4.0 has its imperfections, but the moment it hit me was it's it got like four things really down to a science. The UI is actually incredibly amazing for what exists at the time. And I think the UI was one of the biggest breakthroughs they've figured out that's not talked about enough. But that's a completely different subject. What GPT is really able to do is process a lot of things. Oh my God, this is such a huge subject. Intent, reasoning, chain of thought, mixture of experts, and all that good stuff is in like through this simple UI pane of glass for you to access um, with incredible context awareness. And I think that's like what I just named is like five different things that have are like five different disciplines in the computing science world. And ChatGPT is a merge of all five of these disciplines. It's incredibly capable because of this merging of everything that I just discussed. And we're, you know, one of the things that really hit at the time was some famous guy saying, "We this is the first time we've taught computers to think," and that's kind of true. We've taught computers to compute in the past, which is just doing math, but this is the first time we've taught them to think. And if you've ever played around with like DeepSeek or some of the versions that reveal the underlying thought processes of the AI, um, before it spits out the answer, it's actually extremely fascinating to see how it reasons through what you ask it and then how it decides what type of answer it's going to give you and whether or not it goes through the process of verifying that the answer it's about to give you is relevant to the question you asked it. That's incredibly computationally expensive and incredibly well designed from a technological perspective to get at what is the end result, which is ChatGPT. Like there's so much things happening under the hood. It's incredible. You have to kind of like look at what it's doing and acknowledge that this is also a tool. But at the end of the day, there's so much going on. And like if the question Jessica asked, which is like, what does ChatGPT do? And it's easier for me to answer, what does ChatGPT not do? Right? It's not good at certain
Hmm.
things, such as it's not good at something it has no prior training on. For example, you can't ask it about some fictional story in your head that it has no idea about. It's not very good at visual-based tasks, but that's because it has inherent limitations as a large language model. There are very other models um, that are very good at, visual-based tasks. There's music models, there's vision models, there's sound models, there's um, image recognition models, right? So ChatGPT cannot do as well as those other models. But you have to choose the right model for the right job is ultimately what that boils down to. And, if you're trying to accomplish something, it does come down to picking the right model for what you're trying to do. And then once you understand what each individual model is capable of, and you're good at applying them to the task at hand, you will become very good at whatever you're trying to do. And hopefully that might be a sellable skill on your resume. Let's see, what did everyone type out?
I think it's an amazing skill.
Yeah, let's see. Everyone's typing things. I didn't expect to go on a quick monologue about GPT and AI. Which is interesting because I'm a writer, and the primary thing I do for my work as a head of content and marketing is a lot of writing. And I do utilize it, and I don't think, but at the same time, people are asking me, do you think it'll replace you? And I go, no, there's no way. Because GPT and these LMs lack fundamental taste, and they don't understand um, the difficulties of execution and experience that I have, which is why I think there's no way it could ever replace me. Yeah,
I
GPT.
think it's astute. I think you're absolutely right, though. I think the nature of what we are not merely, the nature of what we are as people and what value becomes is less the transactional elements that AI provides. And I tend towards your viewpoint, Colin, that if we properly, hopefully properly regulate this going forward and encourage innovation in this space, it builds into a catalyst for economic growth rather than a cost of one. So to your points and all the points you mentioned, I think you're absolutely right. So
Yeah. So
I don't know. Is it fun? I love this. It was great.
Michael is saying GPT doesn't think, which is, I mean, this is a charged, statement. Like, what is thought,
Uh,
right? I would actually go
oh
to
yeah.
argue that most people, even me, like on a day-to-day basis, we probably spend less than 20 to 30% of our actual awake time thinking. Thinking is an unbelievably difficult process. And people drastically underestimate what it means to think. This is something that as early as Socrates, like what is that in Plato? They're like thinking, the philosophers. What does that mean to think? Thinking is unbelievably difficult. It's why it's so hard for us to do it. And one of the pieces of advice I do give people I know is like you need to learn to stop autopiloting as much because we do autopilot a lot. You autopilot every time you drive. Think about that for a moment.
Mm.
You're operating an incredibly dangerous vehicle, and you're probably less than 10 seconds away from mortal death. And a lot of the times, you're not thinking when you're driving. That's why you have moments where you realize, oh, I probably could have died right there, or you have to hit the brakes, right? Those things happen probably because you were not thinking. And if you're not thinking, it's because thinking is hard. Thinking, the brain gets what, 20% of the body's entire energy. That tells you evolution wanted the brain to function at the current level we function at. And there was a huge evolutionary advantage for the
Right.
brain to exist. But because of the difficulty of thinking and that high energy cost, right? Um, it's actually the brain is not constantly thinking 24/7. Even if you have anxiety, yes, neurospicy people, I understand. Uh, the brain throws weird things at you. That's not actual thought. That's just, unprocessed thought. Processed thought, the the ability to think, that is unbelievably difficult. It's unbelievably hard to maintain as well. Most people can't think for like 10 to 20 minutes at a time. It's impossible. That's why after you have like intense focus, you feel extremely tired. That is your brain is tired. It's a tool that can think for short spurts at a time, but the rest of the time it's on autopilot. So, to kind of bring this back to what Michael might be trying to say is, yes, maybe GPT isn't like doing true thought, but like then I challenge you to question, like ask, what is true thought? And how do you think about, and how do you know when you've achieved it? And also, the thing we do on our biological hardware in our brain might not translate one to one in a computing aspect, but being able to mimic it to a certain extent, at the end of the day, if you can't taste the difference between real meat and fake meat, does it really matter? So there's that. Yeah. Bye, Scott. I appreciate your time. This is just the Colin having a. You want to challenge me in chess or Go for money in 5 minute Fisher clock after I consult ChatGPT. I mean, I'd play you in both. I enjoy both games without ChatGPT. But like, what is the purpose of such a challenge? Is like, if the goal is to prove to me that somehow you're better than GPT, I'm not sure that's the right way to prove it, or a singing contest. Because have you seen some of these music models? They're incredible. They're very good at generating music. Yeah, I don't get it. Could you describe your specific goal and why you're proposing a contest to achieve this goal?
Oh, this is fun. I was
Yeah.
just,
While you write that out, I'll read everyone else's thing. Joe Chin says, with all due
this is a great
respect, purely
discussion.
statistical machine,
Yeah.
as eloquent and
So,
useful as its response may be as current, is not comparable to the beautiful complexity of the human brain. That's true. It's not there, but like the I think the qualifier is it's not there yet, right? Um, at the end of the day, we have to ask ourselves, will AI one day reach general purpose intelligence? And the answer is, I think in the tech community overall, like yes, we just don't know when, right? Um, 5 years ago when COVID started, we didn't expect ChatGPT in the next 5 years. When I was a student journalist at a time, we expected something like ChatGPT in 23.5, actually. I remember distinctively because I was curious about the subject and I talked to the brightest minds in 2016 at a Chicago conference. And they said, hey, we think earliest for something that looks like general purpose intelligence, 23.5 is an aggressive number, but most people at the time thought it would arrive around 2050. So we're obviously 12 years ahead of schedule, which means uh, that as humans, we're having a hard time predicting when we'll achieve general purpose intelligence. And that is kind of the fact. Uh, adv the advances of technology are always a little faster than we expect them to be. Like, for example, we discovered the power of flight. The Will Wright brothers, they figured out flight in like 1911, right? And then 60 years later, we reached the moon. I don't think most people understand that. In one generation, we went from figuring out airplanes to sending a spaceship to the moon. Like, do you realize how incredibly like drastic of a leap in technology that is to go from, hey, this thing can fly
uh-oh.
for about 15 seconds to let's send something to the moon. Right. That's an incredible jump in technology, and we're seeing that jump again today. Um, let's see. Da 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 da.
I think the Wright brothers flew in 1903 back to us.
Oh,
It's killing me as a history person, but I know that
1901.
they
Like
use it
all
11.
I know is
That's
it's
the,
less than 60 years, right? One person could have been like 10
I know.
when the Wright brothers flew
I'm
and
being
70
persnickety.
something
I
when
went to Kitty Hawk. I went there. I visited it. I was an enthusiast. I appreciate it. This is good.
skills for many people are inherent to personalities, you would get wasted. Just because you can read instructions doesn't mean you can do a task. You can't matrix yourself to know martial arts, like you were saying, is trying to get a pig to fly. Keep clicking it. Five laws. Does
So I gotta go, everybody.
okay?
I
We're
got Reilly
actually over
business to take
time.
care of. I
But
will take
Michael,
care of.
I don't think you're understanding what I was trying to say when I was saying you can
Thanks,
do a
guys.
bit of learning through GPT. But that's a conversation for another time. Thank you, everyone, for staying. I hope that this was an interesting jobs report and industry analysis by Dr. Reilly White. It's a shame Albert couldn't have been here for most of this, but I am your host, Colin Moe, and I hope to see you next month. Cheers and have a nice day.